Welcome to the weekly markets update. I'm Mari Sagarishvili, investment consultant at Kamak Retirement Group. Today we're recapping what moved the markets during the week from October 12th to October 16th. Stock prices struggled to find a direction this past week as rising coronavirus cases and stimulus worry continues to dominate the headlines. The major indices were mostly flat, with the S&P 500 index only up 0.21%. Third quarter earnings season kicked off this past week. Banks were among the first to report earnings, with Citigroup, Goldman, JP Morgan reporting better than expected results on pandemic-fueled trading windfalls and lower loan loss provisions. However, Wells Fargo and Bank of America did not fare quite as well as their peers. Despite some encouraging news, bank stocks still remain out of favor. Mortgage interest rates hit another all-time low this past week, with average 30-year fixed rate falling to 2.81%. This is the 10th time that mortgage rates hit a new record low this year. Amount of negative yielding debt, bonds that cause bondholders to lose money, has climbed back towards its 2019 high of nearly $17 trillion. The recent surge has been driven by central banks who have pumped record amounts of money into the bond market to stem the economic damage caused by the coronavirus. The lack of yield is forcing investors into riskier sectors of the bond market. Initial jobless claims jumped 898,000 this past week. This is the highest level of first-time claims in 7 weeks, a sign that the labor market recovery may be stalling. However, continuing claims, which report total number of Americans collecting benefits, declined to 10 million. Consumer prices rose at 1.4% annualized pace in September. The core measure, which excludes food and energy prices, held steady at 1.7% for the last 12 months. While the inflation has increased from its pandemic-induced decline, it remains below the Fed's 2% target. However, the record fund flows into Treasury inflation-protected securities funds suggest that investors think the inflation may continue to rise. Retail sales were surprisingly strong in September, rising 1.9%, well ahead of expectation. The indicator is closely monitored as seen as a barometer of the health of the economy, which is primarily driven by consumer spending. While the data is very strong, investors question whether momentum can be sustained. Now the labor market recovery is stalling and further stimulus from the government has been delayed. The race to find a vaccine appears to be running in a few speed bumps. Last month, AstraZeneca's trial was paused after a UK volunteer contracted unexplained neurological illness. This past week, Johnson & Johnson and Eli Lilly temporarily halted their phase 3 trials due to safety concerns. These developments are likely to intensify concerns that drug companies are bowing to political pressure in a rush to find a cure. Thank you for watching. For questions, please visit our website, kamakretirement.com.